Okay, welcome back to the channel. I'm Trajan from Morning Download, and we're doing something different today. We're joined by a guest, Eric Cantor, who is the CEO of Vincent, that does alternative investments, and they've got a great newsletter. Today, we're going to talk about why alternative investments might play a role in your portfolio and your diversification, and then how to get into some of the hot pre-IPO stocks and why that might be worth looking at. Eric, how'd I do? Do you want to add anything to that?
Thanks, Trajan. That was amazing. Just compliment you for morning download, and I was a reader. Now I'm in the show, so happy to continue getting to know you and try to help some of your readers, navigate what's an exciting and challenging and potentially very profitable space.
Yeah, thank you. Thanks. So what are alternative assets and how does it help diversify your portfolio? Why not just put everything into the S&P 500?
That's a great question. So you talk about S&P 500, traditional investment portfolio, 60-40. You got some stocks, you got some bonds. Everybody's happy. That has created, very strong returns over the last 100 years. But increasingly, people have wanted to find alternatives for a number of reasons. One is they see companies like, let's take an example like Reddit, right? A company that went public last year, showed up on the stock exchange. So if you're doing your 60-40, you're buying some stocks, you might have seen Reddit and saw, it did, I don't know, I'd say 40% from the IPO to the end of the year. That's exciting. What you may not be aware of is that Reddit existed for 15 years as a private company, and depending where you invested, whether you're in the seed round, which was probably priced around $5 to $10 million total market cap, or one of the later private rounds, which actually was priced above the IPO, you just had a very different journey. And so people are seeing those, expanded return profiles in private markets, and they're also seeing that fewer companies are public. A lot of the hotter companies are staying private. You see a company like SpaceX that obviously has the profile to go public, recently valued at $350 billion. They're staying private. So access to more of these opportunities that might outperform is one. Number two is liquidity. In the private markets, you can't sell your stock when you see some news and panic. For some people, that's a challenge, right? Because I got to pay my bills. On the other hand, it also helps increase returns. So there's like an illiquidity premium that I can generate by not effectively not being able to get out of a position for a long period of time. So those are just a couple reasons, but as you've sort of tapped into, a lot of investors would like to expand their holdings and incorporate some private market assets.
So how would you do that if I want to get in on SpaceX or Neuralink? There's an article about that on your website with Vincent, and we can link it down below. Why would I buy into those pre-IPO, and how long do I have to hold them, and how do I get access?
No, that's a great question. And people are trying to navigate that. That's why really Vincent exists. I mean, the reason why we created Vincent was because we saw this growing number of investors entering the asset classes. And we say the asset classes, we're actually talking about 6. We cover venture capital, which is what you're asking about. Additionally, we cover art and collectibles, private credit, real estate, and crypto, all of which have their own, idiosyncrasies, but together we consider those to be private market assets. And those are really the things that most of our investors, we have an audience of 110,000 investors that are to some degree in the space. Those are the assets that they want to learn more about, and we help them do that. So to answer your question about SpaceX, you have to find somebody who has SpaceX and is willing to sell it, right? Because unless you have Elon Musk on your speed dial and you're going to write a $2 billion check, you're not getting access to a primary round in a company like that. Mm-hmm. What you might do, though, is find a platform, and we work with a number of them, where those stocks are being offered, and you'd value it similar to the way that you value a public company, right? You might look at multiples. What do you think the future holds? You can do the same with private companies. You just don't have as much access to information because the private companies are closely held. They don't have to release financials. That's one of several benefits of staying private. So you have to put the pieces together, read the tea leaves, and so there's a lot more risk and reward, to be had. But the answer is you have to find a platform or a provider who offers that. So companies like EquityZen, Ford, Zenbato, Setter, Hive, these are partners we work with at Vincent who can enable investors to take positions in these companies. If you have a smaller check to write, because most of those, a lot of this stuff you can't really get into unless you're going to write a $250,000 check. There are other alternatives that are more easily accessible. So things like, if you've seen the Destiny, the DXYZ, it's a holdco that holds like 10 or 20 of the top private names. SpaceX is in there. You can buy a share. I mean, I haven't checked the share price lately, but it's certainly in the $20 to $50 range to buy a share of that.
Okay.
There's some other products. Kathy Wood, ARC Ventures, has a public-private crossover fund. There's a ticker XOVR that holds some of these positions. Fundrise. So there's a number of on-ramps. And what we try to do at Vincent is to help investors figure out which one's right for them and understand what they're getting into before they start, like you said, buying a bunch of positions in these companies.
So you help consult how it might add to their portfolio, risk return considered.
Yeah, I mean, your portfolio it's your business, right? Like, it's hard. We don't give investment advice. If you got a call me and said, "Hey, let me show you my allocation. Like, what should I do in privates?" We might be able to answer that, but we're really talking to such a big set of users. Everyone's got their own situation, their own asset allocation, their own needs. So we can't say, "Oh, you should put 2% of your net worth in SpaceX," right? We don't know what your situation is, why that appeals to you. What we can do is tell you how to think about that. So how do these assets fit in your portfolio? And people are, again, there's huge variance, but if you look at like the Tiger 21s, the ultra high net worth and hedge funds, endowments, family offices, they're moving to more of like a 40-30-20-10 model, meaning that they've reduced the private equities a lot. In the case of the Yale, which is sort of the quintessential endowment, they've gotten rid of it entirely, and then they allocate to real estate, private equities, and some of the other more edgy alternatives, hedge funds, crypto, et cetera. Just because the Yale endowment does that does not mean it's right for you. You got to think about your situation, what checks you're writing. But there's generally some allocation of, say, 2 to 10% into privates that is going to give people that extra ability to earn more while not taking ridiculous amounts of risk, and also not investing an amount that's, like, if it was tied up for a long period of time, would cause them undue stress. But again, everyone's got their own situation.
Yeah, it's interesting. There are assets that you can take just a small part of your portfolio, and the downside is pretty minimal, but the upside is huge. If you've got 2% in an alternative asset or 2% in Bitcoin, and it goes to zero, that's not going to affect you that much. But if it
Bitcoin is like the quintessential 2% asset, right? So that's a common advice. Hey, look, you're worth 100K. Like, why not put 2K into Bitcoin? Because maybe it'll do what it did over the last 10 years and give you another 100K, or maybe it'll go to zero and you'll still have 98. I mean, it's a common advice. I don't necessarily disagree with it, but again, look at your situation, because you only have 50 of those arrows in your quiver, right? Like, you can't put 2% into everything and think, oh, something's, you don't want to spray and pray too much. So
yeah, that's the diversification.
Venture capital is also an asymmetric bet, like crypto, in the sense that if you put 10K into some company, you can only lose 10K. But you could, like in the case of an Uber, right? Guys in the seed round that wrote a $10,000 check, I think walked away with $25 million.
Wow.
Now, that's a 1 in a million. Like, literally, that's a very unlikely outcome and not one you should plan on or expect. But venture and crypto both kind of work in that way. I don't know what Bitcoin's doing today. Yesterday it was having a tough day, but I guess
another tough day.
The reason I'm raising that is because I think it's easier for Bitcoin to go from $100 to $1,000 than it is to go from 100,000 to 1 million. So I actually think Bitcoin might be entering more of a mature stage, similar to the same analogy in startups. So, like, you're starting a company in your garage, and I invest $10,000 at a $4 million price point tomorrow. That's got a lot of upside. Whereas if you're SpaceX trading at $350 billion and I invest my 10K there, I think the downside is protected, but the upside's also much more limited. And you just have
so the earlier you invest, the higher risk and reward that you can take on.
Exactly. So the Reddit example from before, I mean, if you invested, I actually, full disclosure, I did invest in, like, I think through an AngelList syndicate. That's one of many platforms people use to access venture, into Reddit in maybe 3 years ago, and that was flat to the IPO. So I got stock at the IPO, had not made any money. It's done well since the IPO, which is great. But if you had made that investment 10 years earlier, you're talking about multi-million dollar returns there on a, I think it was $1,000 investment.
Mm-hmm.
So yes, where you're at on the curve matters in all these asset classes, right?
It's
And even
interesting.
private credit.
It's interesting. I think investors, when we look up companies and find that they're private, most people probably just think, okay, well, I can't invest in that. I can't invest in Neuralink, for example. It's not public yet. I can't buy it in my Fidelity account. But they don't know that there's this whole other avenue of ways to get access to it before it even hits the IPO. Kind of a new
Most
thing, I
companies
think.
are private, right? I think there's 3,000 public companies in the U.S. right now, which is like less than there was like 20 years ago. There must be. I mean, I don't remember the number. There was a statistic going around about how in the private markets, you have like 87% of the companies that do 100 million or more in revenue are private.
Wow.
That being said, not a lot of those are set up properly for like an investor to invest in.
Mm-hmm.
If it's a closely held family running in and just paying their, upkeeping themselves, like there's not necessarily room or the kind of profile that you want to invest in. The investment generally goes into super high growth tech companies
Right.
that are either doubling or tripling every year and creating massive market value or going to zero, like you said.
Yeah, it's usually one or the other. So how, as an investor, how do I get access to these kind of things? Would a viewer go to your website, sign up for your newsletter,
Yeah.
or
Yes,
what?
it's definitely harder. And yes, signing up for our newsletter, www.withvincent.com, invest with Vincent. That'll give you access to a lot of tips, insights, information. But we ourselves don't sell investments. Like we don't have an investment. We just have a lot of relationships with partners who are investment platforms or managers who would like to get access to the investors who want to participate. So we'll put together, like you mentioned, SpaceX. We just did a briefing last month. We dug into the research. I think we had about 350 investors sign up. We did a live session, Q&A, did a little deck, talked about the business, where the revenue streams, could it go public? What are the price, what are the valuations over time? Just did like an analyst report on that name. And then, if people wanted to invest, we introduced into a partner who could handle that. In this case, that was upmarket. But there's a number of places you can get the SpaceX exposure. We try to help you not just decide, is this a company I want to invest in? Is this an asset class I want to invest in? But also, who are these partners? How do I get access? And how do I know that it's legit, right? Because in this particular trade, in these SPVs, there's a lot of, just bait and switch and people that want to make fees on fees and people that'll, if I have access to SpaceX, I create an SPV and then you create an SPV into my SPV. So someone's paying multiple layers of management fees. There's a lot of deals that you don't want to get into. And we try to, we can't protect you from that because we're not your advisor, but we try to tell you what those are so that you don't fall prey to them and to highlight the companies that are doing it right so that you can, feel a little more comfortable engaging with them. But a lot of, that's one of the risks in privates, right? Is exactly one of the
just
risks.
being aware that there are all these different layers is half the battle.
Yeah, I mean, I think that is one of the challenges / opportunities with private markets, right? Because in a public market, I can say, hey, Trajan, I think Tesla's really good. It's underpriced, and you can go on your app. I mean, you may not have one, but most people have Robinhood or Public.com, which is one that we provide, some bonus access to, or E-Trade or whatever, and they can go buy that stock. It's pretty straightforward. And you don't have a lot of questions in your, should I diligence? Who are these? Like, I know that, JP Morgan or Robinhood is legit. I own the stock in my name. It's a little scary out on this frontier when you say, there's some guy told me about an SPV into SpaceX, like never met the guy before. You got to know what questions to ask and to know that you're validating like the ownership there. And there's a lot of games being played because there is less transparency in that market. And so that's partly why you need the higher returns to justify, playing.
Right. Yeah. Yeah. So I like what you said about how you did the call, going through all of the metrics for SpaceX. It was SpaceX, right?
Mhm.
If I wanted to get on those kind of calls, do I get access to that just being on your newsletter, or do I have to be a client?
We've made most of them public just to see how the flow would go. Now that we've got them down, we're actually going to put them behind our subscription. So we just launched a subscription to Vincent Air Insider, which is Vincent's premium offering. The idea of Insider is that it's hard to navigate these markets. Wouldn't you like to know what the pros are doing? So
Yeah.
Anthony Scaramucci comes on our podcast. He makes a couple picks. Jason Calcanis talks to us on a call. He makes a couple picks. We're gonna send those picks weekly to our subscribers. So you might get a pick like, hey, like Jason thinks SpaceX is priced pretty well right now. And then we have to give you that preferred access and say, hey, here's a platform where you can transact. So all the questions you're asking, how do I do it? We're trying to just make that easier. And we've launched a pretty low cost subscription we believe includes everything a private market investor needs to navigate the space. And that's called Insider. So the answer to your question is those briefings are going to, for the most part, move behind the Insider subscription wall and just be really focused on those investors who really want to get that edge.
Okay. Well, just to wrap this up, is there anything any of our listeners need to know about how to invest in private markets or any of the other asset classes we've talked about?
Yeah, I mean, we're talking about this every week. So if you want to subscribe to our newsletter, give us thoughts on that. Actually, we're doing a deep dive into Glean, which is an enterprise AI search company on Monday. Might be a good starting point. Again, if you go to www.withvincent.com, you can sign up for that one. I would just say, these markets are exciting. They're challenging. They're fraught with risk. They're fraught with opportunity for high returns. You meet a lot of interesting people. So, if you think you're in a position where you want to start allocating to this, do it and just do it with your eyes open because there's a lot of ways to get in trouble. Happy investing is what I would tell your readers. And we'd like to bring some of our readers to you and share what we do with your readers and see if there's, some cross pollination there, because I think that public and private those boundaries are slimming, right? Because of the stuff we're talking about. More people can get access, more people want access. What's the difference between public and private? It's really just going to become more of like a legal classification than a style of investing.
Yeah, for sure. And in our newsletter, which we send out every day, we almost exclusively talk about the public markets. It's what's happening in the public markets, the crypto, the equity markets, the economy, the macro, and how it relates to your personal finance and your retirement. A lot of our readers are focused on retirement. They're either in retirement or planning retirement. So it's nice to have this partnership with you where we can add the private markets, because that's a whole different ball of wax that we don't deal with. So if you're watching this or listening, subscribe to With Vincent down below and to Morning Download. Also, I'll put the links there and a link to their website where you can see some of the Neuralink pre-IPO briefings and some of the other things that we talked about today. And you can get more information from Eric and from Morning Download. Thanks for joining me, Eric. This has been a lot of fun.
Thanks, Trajan. Thanks for everything you do for all the investors out there, myself included. Appreciate it.
Thanks. Okay, we'll see you guys next time. Bye.